there, everyone. I hope you guys are all doing well. Okay, so here we are. Today is Thursday the 30th. And yesterday, the Fed did drop the federal interest rate 0.25%. But I wanted to share with everyone, I know we've talked about this before in the past, that the Fed rate doesn't directly correlate with mortgage. So mortgage interest rates have remained pretty stable, maybe even just a tad higher today. But the stock market reacted very positively, went up about 150 points in reaction to the Fed's reduction. So I want to give you guys a heads up where we are, because we are right now the lowest interest rates we've been in over a year. The 30-year fixed is about 6.17. And again, it depends on your relationship with your bank and your credit, but on an average of 6.17, which again, the Fed dropped rates. We'll see how it unfolds next week. Hopefully we'll see mortgage kind of start to correlate with the Fed's coming down. You know, the bond market more impacts mortgage than the Federal Reserve, but they influence us. And right now, a 15-year you can get for 5.41. And what I always recommend to every buyer, right now we are poised to see rates come down. You know, there's no crystal ball. I would recommend don't go with a 30-year loan. Go with a 7-year ARM, because right now you can get a 7-year ARM for in the mid fives. So a 7-year or a 10-year. And what all that means is that you're locked in for 7 years. And then at the 7-year mark, you either adjust to the current rate for the remainder of the 30 years, or before that time, you would refinance, which is what most people will do. So I would recommend don't go with a 30-year loan. If you can go with a 15, that's awesome. But the 7 and 10 years are like in the mid fives, 5.5, 5.4, 5.3, something in that range, which is really affordable as compared to low sixes, right? And then right now here in our East Bay, everybody's asking me what's going on locally. Right now, we're pretty stable. We've had a little bit of an uptick in the amount of demand that we're seeing on our properties in the last 30 days. I've had a few sell with multiple offers in this last week or so. The market's still normal, right? It takes work and time. I would anticipate that the house will, it just requires showings and work to get you pending. But right now there's 1,340 active listings in our East Bay, and there's 553 pending, which just means that's a pretty normal market. If you look at the inventory and the pending, that usually requires about a 3 to 4 month period of time where all the listings would be sold if nothing else hit the market, and that's considered very normal in our world. It's a seller's market if it takes less than a month, and it's a buyer's market if it's more than 6 months. So if that makes sense. But if you have questions, let me know. But again, everyone's asking about the mortgage, what happened today with mortgages. We are a little bit the same, a little higher in some areas, but the Fed's adjustment hasn't impacted yet our mortgage rates. Stock market went up in anticipation of some positive, conversation. If you guys have questions, let me know. I'm Lisa Doyle. Talk to you guys soon. Take care.